after your name. So like some guests, VC audience can ask your questions directly after your presentation. Okay, one more minute and then we can start.
How are you feeling? Did you get over? Oh, sorry.
Oh, sorry. Oshi.
No, I just wanted to know if you got over your allergy.
Oh, yeah. Yes. All good. All good. Yeah.
Awesome.
I had a bad allergy the other day. Cool. All right, let's get started. Hello, everyone. Welcome to the third Sharp Dubai demo day. So we did one online and then one offline in Dubai back in March. And then this is our third demo day, and this one is themed NFTfi, because NFTfi is a key vertical that we're looking at. We're quite bullish on this vertical, although currently this is it's very bare at the moment. The trading volume has been like shrinking a lot since all-time high. But yeah, we're quite bullish in this vertical, and we're quite impressed with what you are building with your protocol as well. Some quick background. So I'm Belinda Zhou from Sharding Capital. So thank you so much for being here. Hopefully for a full 2 hours. And I'm sure it will be also one of the most rewarding 2 hours you spend, hopefully this week. And Shard Dubai is our flagship event. So Sharding Capital, basically, we're based here in the Middle East, and we are a early stage venture funds, but we invest globally. So we really focus on powering like quality founders from day one. So we do a lot of project research and then find the right founders that we want to back, and then we support with a lot of resources. So we tend to really get our hands dirty with the founders, you know, because we have been founder ourselves in the crypto space. So we're quite aware of what resources you guys will need at different stages. And then basically Shard Dubai is the first and largest demo day we have in Dubai. Like the event basically showcase the quality project we come across during our research journey. And we usually host it online so that it's convenient for the project to attend. And then we'll do twice a year offline here in Dubai. And then with the offline one, it will be a whole day event. We'll gather a lot of quality VCs, a lot of government entities like the Dubai government, etc. And then sometimes like there are people from elsewhere in the Gulf region will attend, like from Qatar, etc. Basically, like we help the founders to demonstrate their ideas or products in front of a very international audience. Comprised of Middle Eastern VCs and global VCs. And yeah, so that's basically the background for Sharding Capital and also Shard Dubai demo day events. And without further ado, I think we can get started. Today we have 7 teams, including some of the OG NFTfi project and then emerging, you know, rising stars. And every project will have about 10 minutes to demo your product or pitch your ideas. And I will have 3 minutes for the VC to ask questions for any audience. And if you're over time, I will just wave and then try to let you know we have to have a hard stop. Please make sure you manage your time properly. And according to the sequence, we'll have like the 7 projects, Wasabi, first of all, and then Insrt Finance, Sujiko, DEX, Strike Vault, Nibbl, and Kairos. Okay, I think we can get started. So we'll have Wasabi. Aaron, go ahead first.
Hi, guys. It's great to be here. Thanks for organizing, Belinda and Sharding Capital. Very excited to be here. I'm Eren, co-founder and CEO of Wasabi. So at Wasabi, we're building the decentralized NFT options protocol. Could I potentially share my screen?
Yes.
If you could.
Can you, I think you can share, right? Directly? If not,
It
Sean,
says
please access.
host disabled.
Yeah, you can
Okay.
you can do it now.
I'm still getting host disabled participant screen sharing. Oh, okay, now it works. So we're the decentralized NFT options protocol. We're not a standalone product. We're actually a financial primitive for all the NFT economies and for all the different NFTfi protocols to integrate with. As we know, like right now, we're in the bear market, but over the past year, the NFT markets have been maturing. And we need critical financial infrastructure to be able to support the volume and the transactions that we're seeing. So right now, we have these major marketplaces and lending protocols, and people can only buy low and hope to sell high, or can hope to get instant liquidity on their assets. But with options, you can capitalize on market swings on both sides. So you don't only have to bet that the price will go up. You can also bet that the price will go down. This lets you to hedge NFTs and NFT collateralized loans. So like if as a lender, if I'm scared of the NFT prices going down and defaulting, I could potentially buy an insurance on my loan on Wasabi by purchasing a put option, and I would virtually have zero downside risk, which would increase lending volume on the lending protocols. I can earn premiums on my digital assets. So right now, people are basically sitting on heavy bags that they've collected over the bull market. Those NFTs, they can't do anything with them. And on Wasabi, they could basically earn money on them sustainably. And then lastly, market making NFT collections is pretty hard, but like with Wasabi, as soon as you deposit your NFTs and or ETH, it's totally up to you. Our automatic pools, our option issuance pools automatically interact with the market for you. So you can earn 24% interest on your assets without spending a lot of time. When we say NFTs, we don't only mean PFPs. There are a bunch of use cases that are emerging, and Wasabi serves all of these use cases as public infrastructure for all the NFT-based economies. So right now we have on-chain identity. We've seen examples of artists such as Rihanna selling their rights to their music through NFTs. We have in-game assets that represent real-world economies. We have metaverse land, metaverse assets. Fine art needs insurance, but the holy grail that we're working towards is real-world assets. And as these use cases mature, Wasabi wants to be a liquidity layer that basically distributes liquidity to all the different use cases. On our protocol, there are a couple of things that makes us unique. Like there's a reason why none of the previous NFT options protocols got significant traction. And basically we're addressing that both on the issuer level and the seller and the buyer level. So as a liquidity provider on Wasabi, you can deposit ETH and or NFT collections into pools. And then you define your risk parameters, and the pool automatically issues calls and puts to the market in the form of NFTs for you. As a trader, you don't only have to be bullish like you used to, you can also be bearish. And basically, in order to buy an option, you pay a premium, and then you get an NFT that represents that position. So because now you have that NFT, you can cash settle by just selling your open position, or you can exercise the option to take profits if you're in a profitable position. Our intuitive, so on the trader side, so the two innovations that I previously mentioned, on the liquidity provider side, we have option liquidity pools, which don't have preset options on the collateral. And then on the trader side, we have a virtual order book. So what happens is, as soon as you deposit as an LP your assets into a pool, on the front end, we render all the potential options that the trader can choose from. This hides liquidity fragmentation. It hides any kind of illiquidity that might be present in the protocol, and it creates, it streamlines order matching between the trader and the issuer. So on the traction side of things, I'm going to take a pause here because the deck represents only our testnet traction numbers. Our mainnet traction numbers are actually on our website. So if you go to wasabi.xyz, you're going to be able to see how much TVL we have, how much interest we're generating for our LPs. This interest is not generated in Wasabi token or anything. It is pure Ethereum. So by depositing NFTs and or ETH onto Wasabi, you earn 26.49% annually on your assets. And right now we have 3.6K options available. I'm going to go ahead and launch the app. We're basically making it extremely easy for anyone to get exposure to these assets. One of the newest features that we've deployed, this is the first time I'm actually sharing this feature with the market, is our buy now, pay later feature. So as you guys might be aware, Blur recently announced a buy now, pay later product, which uses a loan, but it is essentially a call option. So with us, we're using the same backend that we have, but we've just changed our UI to be more intuitive for the traders. And what happens is basically your buy now price is the premium you're paying upfront in order to purchase the option. If you pay a higher premium upfront, you're going to be closer to being in the money. And then you can choose your expiration dates. No hidden fees, no loans, no interest rate. Like you pay what you see. And eventually, you can exit out of the position if you want to exit out of it without exercising the option. And you pay 50% less gas. So I would urge you guys to check this product out. But that is basically our newest feature. And then going back to our deck, on mainnet, on testnet, we had proven that it is both like beneficial for traders as well as issuers, also the existing spot market. Up until now, we've issued close to 100 Ethereum notional option volume, 27 Ethereum strike volume. So like from the options that we've issued, some 20% were exercised. They generated 27 ETH strike volume on Wasabi, and in correspondence, they generated 25 ETH volume on partner marketplaces such as Blur and OpenSea. We mint we mint our options as NFTs. That creates this concept of a meta market. So you can, whenever you want, you can exit out of the position by selling your NFT option on Wasabi or on any marketplace, because the options themselves are ERC 721s. And this creates interoperability with different lending protocols, with different AMMs, different marketplaces. But also you're seeing a similar thread happen in like Uniswap P3 pools with the collection XYZ AMM, NFT AMM pools. So we're going to start seeing both interoperability between our protocols and their protocols, but also even if the underlying assets are depleted in protocol, you can now trade the open position similar to traditional markets. And our goal is to, like, by using our infrastructure and by using all the benefits that we provide, we're aiming to become an ecosystem, and we're taking strong steps towards that. So we increase the spot transaction volume on all deployed chains. So layer ones and layers twos, it's like brainless for them to partner up with us. For NFT marketplaces, as mentioned, any exercised option, because we're physically settled, we generate more trade volume for the partner marketplaces and AMMs. So we are beneficial for them. NFT lending protocols, similarly, lenders can hedge themselves. Through that, they could put a higher principal to collect a higher interest, which means more volume for lending protocols. We're looking into accepting various liquid staking derivatives instead of our ETH in the pool, so that LPs can continue to earn their 4%. For privacy, we're looking into ZK rollups, and for derivatives and DEXs, we're looking into Uniswap LP position tokens, how to integrate them. And our idea is, so we're starting with decentralized NFT options, which are fully collateralized. In the close future, we want to scale up the product to introduce more scalable financial instruments and create structured products by partnering up with various players in the market. We want to deploy to other networks by 2024, and then 2024 and beyond, we want to have our decentralized governance. Our economics model is very simple. So we take 2% transaction fees on all transactions. So that includes the mint of an option, the sale of an option in the secondary, and the exercise of an option. And then on top of it, we have a rewards program that's ongoing that basically rewards various actions that users can take. And we're a great team of builders. My background's in product. I've helped scale 2 startups, one backed by Google Ventures, the other one by Bain Capital Ventures. My co-founder is the best developer I've ever met. He's been coding since he was 13, I believe. And then we have our COO, who comes from a traditional finance background. And then Karan, who used to be an advisor, actually just came abroad. He is leading our business development efforts. He used to be Kraken and Coinbase. And we're raising our seed round to expand our team, support go-to-market, and compliance.
Sounds good. Thank you, Aaron. I'm a bit more lenient this time because in the previous demo days, people complain I'm too straight with the time. But yeah, very good presentation. Thank you so much. Now we have 3 minutes for the VCs to ask questions. Feel free to go ahead if you have any questions for Wasabi.
I have a question, actually. Thanks for the presentation. First of all, I know you're doing covered call options, and obviously that requires you to exist on layer 1. Layer 1 obviously has all the NFTs on it because most people transact on the Ethereum network. Do you foresee being on layer 1 and doing covered call options as a fundamental problem? Because requiring the NFT to be deposited into your smart contracts is obviously a costly gas transaction. And when you're doing exercising and taking transaction fees, they can obviously get really, really high, especially in the midst of a bull market. When we've seen gas go up to $120, $150, you really have to make it economic for people to write call options and exercise them if the gas fees are that insane. What's your response to that?
Aaron, you're muted.
So my response to that, I disagree. So like one of our biggest value proposition is people making money on these assets, right? So like in order for people to make money on their existing assets, and in order for us to integrate with all the like existing players, lending protocols, it is actually super beneficial to be on Ethereum layer 1 rather than just building like a price index that doesn't touch the market at all. But separately, we have our plans to basically scale up the product and reduce gas fees by deploying on a layer 2 and holding custody of the assets in the native layer 1s. And that'll help us become like fully omni-chain as well. So think about it like you deposit your assets on the native chain, we hold custody of them, and then we create synthetics on a gasless layer 2. And you're able to trade without paying any gas fees.
Awesome. Thank you, Aaron, for the answer. Thank you, James, for the question. Anyone else got questions for Wasabi?
Yeah, me. I'm from Binance Capital, and I just curious about who will underwrite your option. Do you have any partner to do this?
I missed the last part. Do we have any what?
Do you have any background to underwrite your option?
A back note?
Background in writing.
Yes.
We're working, so we have like 2 advisors. One of them is from he used to be a quant at BlackRock, and another fund that I don't have it in the deck, but like he used to be a quant before. Now he's a VP at Polygon Institutional Capital. He has that background. In addition to that, we have a mathematician that is full-time working at as a cryptographer, but like he's helping us price these options. But the idea is we start by like we have an out-of-the-box solution to price them on Wasabi, and we offer it as a third-party service. If you want to deploy your own pricing algorithm, you can. We built it in a modular way. So like we're actually talking to various analytics providers to price options for users, and we're happy to share protocol revenue with successful option pricing algorithms.
Awesome. Great. Thank you. Thank you guys for the questions. Awesome. I think Wasabi moves quite fast, in terms of building out new features and products. Quite impressive. Cool. Like, thank you, Aaron. And second, we have Loris from Insrt Finance to share with us their product.
Hey, everybody. Let me just share the deck with you and double check that everything's working well. 1 second. There we go. Can you see the deck?
Yes, we can.
Is the deck visible? Fantastic. All right. Hey, everybody. My name is Loris. I'm the CEO of Insrt Labs. We're building the Insrt Finance protocol. And our mission at Insrt is to make NFTs productive by scaling them as variable rewards. But before I start, a brief introduction about the team. We mostly come from a traditional tech and finance background, but some of us have had a front row seat as technical operators at some of the most exciting protocols in Web3, such as Olympus, Drift, Drift, Premier Finance. And on top of that, we have a fantastic advisory team. For example, Alex Levine, who is the Chief Legal Officer at Dapper Labs. We know how to build, we know how to generate excitement about what we're building, and a lot of our team members have an organic audience on Twitter that we can use for our go-to-market. But let me just jump into a slide that will provide some context on the problem that we're solving. So the hook model with variable rewards was at the core of the mass adoption of the web over the past 2 decades. And it's not a phenomenon of a bygone era, right? So if you observe NFT mints closely, NFT mints almost perfectly track that hook model, like trigger, action, variable reward, investment. And we believe that the fun and stimulation of what was effectively, opening up an on-chain loot box was just as important for driving the creation of $50 million in digital collectibles as the assets themselves were. But the problem is it doesn't perfectly track that extremely powerful hook model. And the reason is because you can only mint once. At primary issuance, you can only acquire the asset once. It's time scarce. It takes research and knowledge to actually find NFT mints. And insiders have tremendous informational advantages. So in a way, it's kind of ridiculous that for a technology, NFTs, which are supposed to scale on-chain ownership and digital ownership, you have a distribution model that is optimized for extremely niche and silo communities that will absolutely never cross the chasm. And that's exactly what we're solving for at Insrt. With Insrt, we want to create a protocol that will allow users to acquire an NFT from any collection at any time, any place, and from any device. We want to create a new distribution model for NFTs that will allow intangible assets to be scaled on-chain seamlessly. What we exactly are solving for. So what we want users to do is to obtain NFTs as a reward of interacting with an existing user experience. They take a core action within a product, and they have the ability or the chance to win an NFT, sort of like a loot box as a service, as a monetization event, or as a part of taking like a specific core action within a given product. Yet at the same time, we want to circulate the asset base of NFTs. So existing NFT depositors can take their NFTs, deposit it into our unified liquidity pool, and they'll be able to generate a passive return stream. I'm going to cover that, how it works in just a second. But where we want to scale this and where we see a big problem that's currently underserved that could be solved is a lot of companies and a lot of brands are creating novel IP to create Web3 incentives for user acquisition and retention when that might not actually be necessary. They can use the existing IP that's been built up in PFPs and artwork in order to scale their user acquisition and retention efforts. So users will be able to interact with an Insrt liquidity pool. More or less, they can deposit an NFT, which will provide them with a pool token that represents their pro rata share. And on the other hand, on the demand side, initially for V2 go to market, on the other hand, users will be able to take speculative bets on the properties of the pool itself for a chance to win an NFT. So it will be social experience. For example, if you win a Fidenza, which is worth quite a lot of money, you can share that information on Twitter so all of your Twitter friends and your network knows about it. But the idea is that we can drive real yields through initially speculative activities to provide liquidity providers for returns before we open up the protocol, the product as an embedded rewards infrastructure. We've already have a live product. The phase one of our product, what we more or less do is that we allow folks to have fractionalized exposure to existing collections, and we provide them with returns through yield farming in order to ensure that they stay long in that position. And what we've done is that we've reignited interest in existing collections. We're about to cross the 2 million TVL mark. We have 3,000 users. We have 70% retention across our Shard Vault product line. And on top of that, we're currently, if you extrapolate our monthly growth rate and don't assume that we're going to actually grow even faster, and that's what I'm assuming, is that we're currently operating at a 40K monthly run rate. So what we're going to do is that we currently provide fractionalized exposure, and very soon in the next few months, we will put all these assets together in a GMX style unified liquidity pool. And I'm going to describe that in just a second as well. But before I dive into that, I want to emphasize the importance of this problem. So if intangible value can scale to infinity, and NFTs is how we all assume that intangible value will be transacted with and provenance will be obtained for intangible value on chain, then why do we have a distribution model for this asset class that is reminiscent of a financial security? It really doesn't make much sense. And I think this is a good time to really focus in on this problem and to solve the distribution problem of NFTs. You have a lot of big brands who are willing to spend money in order to provide crypto or NFT-derived incentives within their own products. Most new wallet interactions are with NFT, and we're seeing a lot of burgeoning use cases, but there is a caveat to that I'm just going to touch upon in just a second. In terms of the market, I don't think expanding the asset base of NFTs is really the point here. I think that's going to be a second and third order consequence of solving the distribution problem, which will align incentives for creators in the space. So if we find people who are willing to use this asset class within their own real economic activity, we're going to have a market. So what we want to target over time are companies that are either crypto native or crypto curious, and they want to provide crypto-based incentives via NFTs within their own products without necessarily launching their own collection, without necessarily creating their own loyalty points program. And what we really want to focus on is moving away from the primary secondary market distribution model of NFTs. Existing marketplaces, they really only bring in new users if in speculative cycle upswings, right? So NFTs, there's a hype wave, there's a big boom, narratives change, and people might actually come into OpenSea or any other marketplace and start buying and trading NFTs, but it does not necessarily scale on-chain ownership. It only leads to a slight flourishment and speculative activity. On the other hand, while financialization is extremely important, and financialized derivatives, for example, when we're looking at traditional finance, they have a much bigger TAM than the underlying assets themselves. They do circulate and extract liquidity, but we're solving for a slightly different problem here that we believe is even more foundational, which is how do we actually scale on-chain ownership? Well, we believe that we can scale on-chain ownership by initially providing a speculative experience, and secondly, allowing other products to utilize NFTs as rewards within their user experiences. And that's how we can get NFTs in the hands of more people that aren't necessarily going out and looking for NFTs. And on the tech side, how it works is that we have a protocol layer, which is a unified GMX style liquidity pool that rebalances against an automatically an initially set parameters of an index, so what kind of collections we're holding within that pool, and what are the specific allocations. But how it effectively works is that users on one side can deposit an NFT, they get an index token, and that index token generates returns off of the initially speculative activity on the dApp layer, right? So those are the speculative bets that folks can make on the pool, right? How does the allocation change? How does it rebalance us, et cetera? And what we want to do with these first two layers is we want to build a stable, non-fragile system. And once we have a stable, non-fragile system, we can more or less build an API in a SaaS-style dashboard in order to allow other protocols to utilize NFTs as rewards within their own products and offer crypto curious companies to offer incentives within their own products themselves. But the idea, the foundation of all of this is a liquidity pool. If anybody's interested in the specific technical specifications of how the Insrt LP will work, just message me after the pitch, and I'll send you our docs and other tech specs to give you 100% clarity. But to briefly touch upon the business model, it really is just about capturing inbound and outbound flow. It doesn't really matter where the flow comes from. But what's interesting about this is that the pool token, or the INLP token, as we call it right now, is that there's effectively three use cases, right? There's rewards redemption. On the other hand, there is also the fact that it drives returns for the folks who have already deposited their NFT into the pool. But how we see the embedded rewards layer playing out is that other protocols and companies can actually purchase the token to reserve a part of the rewards for their users, the rewards that they want to distribute. Henceforth, there is upwards price pressure on the token simply because it has an infrastructural use case, right? It's kind of like monetizable AWS credits, or at least that's the analogy that I frequently use to explain how we see the token working out in the future. We're not raising any money, at least not right now, and not for the next 4 months. I would definitely love to get some conversations started. What we want to do right now is we're in that phase one where we have that shard wallet product that provides fractionalized exposure and pays people effectively for holding a long position in a given collection. In mid Q3, we're going to unify all these shard wallets together into one unified liquidity pool. And then that's when we're going to launch the downstream Insrt Bets product that will allow users to make speculative bets against the properties of the pool itself. And that's also about the time that we're going to launch the seed round for our protocol for our team. So if anybody wants to get in touch and maintain a conversation, I'm going to update you on our progress over the next 2 or 3 months. And if it would be fantastic if we could find a great fit for a seed round a little bit later down the line. So to cap things off, at Insrt, what we do is we make NFTs productive by turning them into variable rewards. Our team has worked with some of the best Web3 protocols in the space, and we want to change the distribution model for NFTs to really fulfill the promise of what on-chain ownership should be all about. Happy to answer any and all questions.
Thank you, Loris. Very on time. And I love it. Like when he starts, we know how to build and we know how to generate hype as well. As a CMO, myself, I started crypto in 2017. I was a CMO back then for ICO project. So like a fundamental is important, but complemental is also very important for projects. Yeah, great. Great presentation. Anyone got questions for Loris for Insrt Finance?
Really good presentation, Loris. Thanks for that.
Appreciate it.
I know I did see it was purported that you did raise seed funding, or was that pre-seed and you're looking for another round of funding?
We're not looking for another round of funding right now. At least that's not a part of our midterm roadmap. We did raise a pre-seed round of 2.2 million from Hashkey and other investors, and a great base of angel investors. But before we raise a seed round, we really want to get the next system we want to deploy into a steady state, and at the same time improve our run rate and get our TVL to about 4 or 5 million. But we did raise a pre-seed round, yes.
Nice. Thanks for those stats. Once again, great presentation, tremendous use case, and I love how you're fractionalizing exposure to NFTs. I think that's kind of how you onboard the next million, billion users, as people always talk about. So cheers.
Personally, I have a question actually
Sure.
for Insrt. So we know that recently there was a NFT project called Fractional, I think, and that kind of stopped operating because they feel like they're still very far away from monetization. So how would you see this event, Lars?
Fractionalization is an MVP we launched 4 months ago. If I was an investor and somebody told me that we're building an NFT financialization business, I honestly wouldn't give them any money, right? It's just a tool that we use in order to build a book for the Insrt LP. That's been intention from day one, right? Fractionalization as a business model, as most crowdfunding business models in any other industry, the margins are extremely tight and you can barely make any money. So what we're doing right now is we're using the shard vaults in order to effectively build a book, a community-driven book for the Insrt LP, so we don't have to do like a public raise, which falls into a lot of regulatory issues. At the same time, we can already start building a community around our project or our business that's lively and not artificial. We've spent $0 on any form of direct marketing. But fundamentally, the plan from day one was to move to a transactional model. Like I know Andy, I've spoken to him for the past year and a half. I know what Tesla was doing, what their plans were. I don't believe fractionalization is a good business model. And it was an initial stepping stone for our MVP.
Cool. Thank you, Lars. Great. Next, we'll have Jeff from Sujiko to share with us their product.
Awesome. Hey guys. Let me just share my screen. Awesome. Can you see my screen okay?
Yes.
Awesome. I'll start off with, thank you, Belinda, Chung Fu, and Sharding Capital for putting us together and inviting us up to speak. It's a pleasure. Taking it from the top, my name's Zay. I'm the founder here at Sujiko. Sujiko is a derivatives exchange for NFT perpetual futures, primarily focused on blue chip NFTs. Before we go into the protocol, I'll give a bit of background on myself. I studied computer science at university. I've been with a software development company building digital healthcare solutions in the UK for about 10 years now. I started off as a junior software engineer, now leading the organization as CTO. We've taken 4 products to market, all multi-platform wellbeing applications, serving around 1.2 million cumulative users. My induction into crypto is a little bit unique. My dad is an individual who I'd like to say is unique in his own way. He introduced me to 3D printers in 2012 and Bitcoin in 2014. I didn't really pay any attention. He got some miners, stuck them in our study, and I couldn't really ignore it because of the heat and the warmth. Long story short, I think like most people, I ended up mining some Ethereum on my GPU, became aware of the ETH DeFi summer, was very quickly priced out, and became aware of Solana through SBF. I made some small open source contributions over the last year. Now we're moving at full speed with Sujiko. Coming into the NFT space on Solana, especially from Ethereum, there's a few problems that I encountered personally. The first is, of course, blue chip NFTs, you have to buy in full units, which can be very expensive. On top of that, you should be paying royalties, which of course is a controversial topic at the moment. Up until recently, you had to switch wallet to trade a collection that existed on a different chain. That's now being addressed slowly by Phantom and Backpack. And lastly, unless you're a sophisticated trader who understands how to use financial instruments, the likes of, say, options, there's really a vacuum of tools for traders to use and hedge their NFT portfolio with. And that's really where Sujiko as an idea has come together. Sujiko is a derivatives exchange for NFT perps based on Solana. So we're native, of course, to Solana. It allows you to trade blue chip NFTs that do exist on different chains. You can trade with just as little as $1 collateral, or with, of course, the perks of fast transaction speeds and cheap fees. Now, it's I like to go to a demo at this point, keeps everyone engaged. For the sake of brevity, we'll hop over to the platform, we'll connect up with a new account, we'll get started, and we'll open up a small position. I will just go over to the platform now. We'll connect up with a Phantom wallet. We're currently on DevNet, so right now we need to airdrop ourselves some SOL. We'll create a paper trading account. We'll then credit ourselves 1,000 USDC, and this is the equivalent of creating a new account on a centralized exchange, signing up, and depositing 1,000 USDC. We'll update our leverage to 2x. We'll switch to, let's say, the DGODS perp market, and we'll open a $1,800 short. Functionally, it's very similar to what you might have seen on a centralized exchange, with your position being shown on chart as well as on the positions table below. And again, for the sake of brevity, I'll wrap up the demo here and we'll hop back into the deck. Now, a natural question is, well, why even build an NFT perps DEX? Over the last 2 years, we've seen growing usage of derivatives-based DEXs. And contrary to what crypto Twitter may lead you to believe, volume in the NFT space is picking up month on month, especially since the collapse of FTX. The market itself is still in its infancy. If we're looking at the cross-section of NFT DeFi users on Solana, we can estimate around 2,000 daily active users. Looking at the Golden Child protocol across all chains, Uniswap has around 52,000 daily active users. And if we were to estimate the number of active traders in the NFT ecosystem across the top 3 chains, we could estimate around 163,000 daily active users. Competitors in the derivatives-based NFT market are again also quite limited. The only major competitor that's on mainnet or mainnet equivalent in the NFT perp space is NFT perp that exists on Ethereum. Looking at data from Dune Analytics, we can estimate they have around 200 daily active users. They're generating around $8,000 in fees daily, which is roughly $2.75 million annualized. Now, this was accurate to about 3 weeks ago. I know that NFT perp have gone through a bit of an explosion in growth, especially since the likes of Elon Musk tweeting Milady. Coming back to it, if we take a baseline of around 300 monthly active users, that's around 15% of the NFTfi Solana users that are we've looked at, and we were to estimate around $1 million of volume daily across all of our markets. We would generate around $9,000 in fees daily, which is roughly $3.2 million annualized. Now, this assumes a taker fee of 1% and a maker rebate of 0.1%. Now, I briefly mentioned NFT perp. NFT perp is native to Ethereum. If we're looking at Sujiko, Sujiko itself supports markets that represent collections that exist across different chains. We'll be starting off with Sol, ETH, and Poly. But in the future, we can expand quite quickly to additional networks. We have a fee structure that incentivizes external market makers. And we are currently in the midst of developing, or we're rolling out quite shortly, the ability to switch between cross and isolated margin. And we are currently, for some specific markets, supporting up to 10x leverage. For full transparency, that is much more of a marketing piece rather than something we'll be prescribing for all of our markets. And on top of this, we do fundamentally believe that mobile adoption will be a driver of bringing users to Sujiko and into the ecosystem. And as part of this, we're developing an XNFT for Backpack and a Saga native application for the new Solana mobile phone. Now, another question that naturally arises is, why hasn't this problem been solved before? We've been designing this over the last around 6 months. Coming out of Solana Breakpoint last year, we connected up with a number of teams and understood pain points that they experienced when trying to build out an NFT perps protocol. And 3 key points came out of this. The first is liquidity, the lack thereof on spot, as well as initial launch for perpetual markets. Second being how to build reliable price feeds and get robust pricing data on chain. And the third around risk management. How do we manage risk in volatile market conditions and reduce instability within the market as early as possible? Now, Sujiko itself has been designed with all 3 in mind. When it comes to liquidity, we're bootstrapping liquidity from day one with our core product, with our core constant product VAM, and we enable external LPs initially through our decentralized limit order book. In terms of tackling our price feeds, we've taken 3 different approaches. Our primary approach, which is what we've implemented to get us off the ground, is a smart price index where we fetch on-chain data, whether that be transactions or bids and asks. We then process those, we filter out any wash trading, and we compute robust statistics for a particular collection and publish those on chain to be used as the Oracle price feed. And thirdly, when it comes to risk, from the ground up, we've designed Sujiko with guardrails and validation in nearly all elements of the protocol. This includes things like logic for price validation, prevention of pool drains, time-delayed settlement, settlement limits, as well as mechanisms such as auto deleveraging. Our go-to-market strategy, I'll keep it brief, can be split into 3 key sections. The first is around building our reach and funneling users into the platform. The second is around product growth through features. This includes our degen zone, where we introduce new markets, which I'll touch on shortly. And the third is focused on retaining users and increasing user stickiness through engaging with our community. I briefly mentioned the degen zone, but to give it a bit more context, Sujiko markets can be divided into two groups, the first being normal and the second being degen. The normal zone is for your well-established blue chip NFTs, the likes of DGods, Utes, Bored Ape Yacht Club, Azuki, Pudgy Penguins. Degen zone is for your brand new markets. They could represent new collections or well-established collections that did not have a market before. A good example of this is Mad Lads. Now, if a market exists in the degen zone, the parameters for a market are much stricter. There will be limitations to open interest, position size, leverage, as well as to margin ratios, whether that be initial or maintenance. Once a collection is deemed mature, volume and liquidity is deemed stable, we'll then move the market from degen zone to normal zone. Now, that could mean no changes to any of the parameters, or of course, we could lift those restrictions over time. And the primary purpose of the degen zone is to allow speculation on newly minted collections and to capture trading fee revenue from in-demand markets. We're 47 days into Q2. We've shipped paper trading, which is now live. We've rolled out multi-market support. We're in the process of revamping our liquidity model, including our VAM, and we're also working on our native applications for Saga and Backpack. Our next big goals are rolling out cross-margin support, and following that, we'll be then pushing up to mainnet. Our extended roadmap is rich in features such as delegate account control and order tooling. We're looking to raise $1.6 million for 10% at a fully diluted value of 16 million through a safe. We want to put those funds to use to go full time. Currently, this is a weekends and evenings job. We want to develop out our product and engineering team, which I'll touch on shortly in terms of how big we are now, and of course to fund our program audit and go-to-market campaign. We're a small core team of two. That's myself and Hot Dad. I work on all things development and project direction. Hot Dad works on business development. I briefly mentioned my background, been contributing to the open source ecosystem for Solana for about a year, 1.2 years now. And Hot Dad himself has a background in customer relations, business development, and he's been trading in the space for about 2 years. I'll wrap it up there. Of course, I'd invite you guys to check out our platform, have a play around with paper trading on DevNet. Sujiko.trade is our domain, and would love to hear any feedback and any questions.
Awesome. Thank you. Thank you, Jeff, for the great presentation. One thing that, and can you remind me how many team members you have in Sujiko?
Sure. So we currently have 2 core team members.
Right, exactly. So I'm also an investor of Tensor. So Tensor is another marketplace on Solana. And when I invested in them, they also have like very small team like Sujiko. So actually Sujiko kind of gave us the Tensor vibe. Very fast in terms of execution. Quite impressive. So, and anyone got questions for Sujiko, feel free to ask away.
I have a question. How do you guys feel about the competitive landscape? You know, you have Hashgraph coming out that's also working on NFT perps. JPEG has, well, it's an open secret that JPEG wants to build a perps dApp as well. Then Fobar was talking about building potentially a perps DEX. How do you guys feel about the competitive landscape and the choice of some of these competitors to move beyond a VAMM model?
It's a brilliant question. I think what we're seeing now is a lot of teams understanding that the NFT ecosystem is moving in a very similar direction that we saw, Bitcoin in its early days, or let's take the top cryptos, with BitMEX rolling out derivatives and almost taking over the landscape. So I think it's very, for us, it's almost a green flag that we're seeing so many teams almost giving us the thumbs up that we're building around the right idea. I think the interesting thing that we're seeing is a lot of these protocols are popping up on ETH or related networks like Arbitrum. I think we're going to see limited adoption for some of those, especially from different chains, until we can see robust price feeds for let's say, collections on Solana, on say ETH, we are going to see limited markets. I think one benefit that we have with regards to comparing us with other competitors is with our approach to bootstrapping liquidity, incentivizing market makers. I think one of the hardest things that a lot of these teams are going to find is how to, for forking an idea is quite easy, but forking a community as well as liquidity is a completely different challenge. And I think, and to go back to the second part of your question, which is, I think it's really, really interesting to see that these teams are taking, pushing forward with different ideas and innovating beyond just an initial VAM model. I think a vanilla VAM is of course limited in its ability to provide liquidity and enable external LPs. So I'm very excited to see this space almost take a lot of shape now.
Thank you. Great answer.
Awesome. One thing we like about having this kind of demo day is that sometimes projects among themselves find a way to collaborate with each other. And like some of the project in our last few demo days, they just announced partnerships amongst each other as well, apart from the capital injection they got from the demo days. So yeah, feel free, to get some more from the demo days by listening to what others are building as well. Cool. Thank you. Thank you, Joe, so much for the great presentation. Next, we'll have Stark from DEX to share with us what they're building.
Yeah, awesome. Yeah, let me go ahead just to share my screen. Can you guys see the screen well?
Yep.
Awesome. Yeah. So yeah, hello everyone. This is Stark from DEX. So DEX is a decentralized NFT exchanges to help traders trade NFTs like cryptos. So some of the current problems in the space, in the NFT space, first, I think previous projects also mentioned about it. There's price barriers for NFT collections. Not many people have 50 ETH or 100 ETH just to purchase those blue chip NFTs. So therefore, it stopped many users to actually get into the space as well as other investors. And the second, as assets itself, NFTs actually have very low liquidities. So the orders are hard to be filled. And also, for like NFT perpetuals or NFT lending protocols are also have hard time just to, extend to all the collections. About 90% of non-blue chip NFTs are having very low liquidities, and then the financial abilities for NFTs cannot be built on top. And third is for traders, NFT holders, and projects, they're actually losing incentives and revenues, especially after Blur and OpenSea's calling off the royalty shares. A lot of projects are losing their secondary market revenue streams. So therefore, as well as for NFT holders, they're not getting any revenue shares from the growth of NFT market, the NFT projects. So yeah, within those problems, NFT markets they need better trading platforms just to helping users to solve those problems. So therefore, we built a DEX. So DEX is a decentralized NFT exchanges. We're aimed to make trading NFTs with incentives as easy as trading stock or cryptos. So on the trading side, traders can convenience trading NFTs on multiple blockchains with no minimum purchase amounts and at the lowest price. And also NFT projects can list their NFTs with liquidities and establish the tokenomics, incentives, and the utilities for their NFTs. So we're aiming to just build a seamless trading experiences for traders. So traders can easily just swap their NFTs and by providing liquidities. So yeah, let me actually demonstrate to you guys our MVP. So we recently just deployed on testnet, and we're soon doing private testing, beta testing soon. So here's our protocols. So you can connect your wallets. Here we go. And on the main screens, you will be able to see your balance, also your profits, etc. And on the sidebars, you will see all the collections, and also as similar to those crypto exchanges, for your favorite NFTs, you will be able to add to your watch list. You'll be able to see different NFTs with different datas. And on the trading page, in V1, we are using fractionalization for whole collections, and also by using Uniswap for the token tradings. So on the sidebars, you will be able to just purchase your fractionalized NFT as much as what you want. And also you can, by providing the liquidities to earning, trading fees, and also other fees that are being generated from our protocols. And on the sidebars, you'll be able to see all the data. And currently you have two mechanisms to, in order for users to redeem their full NFT back. So one is to a random redeem functions. So if you want to, redeem your NFTs, you can just use this math to redeem a random NFTs. Or if you really like a specific NFTs, so you can start auctions, and by paying the premiums bidding fees, so to win these specific NFTs. And on another side, if you don't like your NFTs, you can easily just random swap it with NFTs in the pool, or you can just sell the NFT directly. Let me go back to here. So like I said, we will have our private beta soon. And through our roadmaps, we will continuing adding more features and functions to help people to trading NFTs like cryptos, such as, we will have leverage trading, we'll have gasless trading, we'll bring the trading layers to layer 2, also have aggregators, and also have utility tools for NFT projects to bring more utilities and values to NFTs. So as the infrastructure itself, different products can build on top by leveraging our liquidity protocols. And for our teams, we're based in US, and two of our co-founders team, we both have technical backgrounds and being in the space for a while. We previously worked at Amazon, eBay, and also our team members are from eBay, Amazon, Google, Blizzard, and also Binance. And yeah, we're trusted by hundreds of partners, and already backed by some top investors such as Polygon Studio, Jump Trading, Emergos, which is Cardano's foundation, and of course our good friend Sharding Capitals. Yeah, so comparing with fungible tokens, we believe NFT has more potentials to bridge Web 2 to Web 3. And also there's so many assets that can actually use NFTs and to build on blockchains. So, and our goal here is just to help all different assets to be as liquid as possible. And currently we're raising our seed round. So if any investors have interest, please don't hesitate to contact us via email, or to me directly on Telegram, or follow us on Twitter. Also, for partners, happy to chat. So we can just building the NFTfi space together. Yes, thank you.
Thank you so much, Doug, for the coherent pitch. Nice. Anyone got questions for what Dex is working on? Well, it's definitely interesting. Like if I can swap my doodle with another doodle. Wondering how the owners will be thinking as well for this kind of product. But definitely it'll be unleashing a lot more liquidity than the market have now. Great. If we don't have questions, now we will have the speaker from Strike Vault. Oshi, feel free to take over.
Great. Thank you, Belinda, and the sharding team for putting this together. It's great to be in the same room with all these awesome teams driving NFTfi forward. Let me just share my screen so I can start the presentation. All right. So Strike is an NFT option vault, making earning a yield on NFTs simple. And we used incentivized option vaults with flexible settlement at expiry. And we aim to increase liquidity to on-chain NFT options. And we will show you the demo at the end of the presentation. So the problem is that basically earning yields through selling options is currently challenging. Definitely because of liquidity, but also because options can be tricky, and option writing requires active management. Also, earning yield in other protocols by using NFTs as collateral is more complex, requiring several operations, managing your position to avoid getting liquidated, and using other DeFi protocols to generate yield and so on. So we solve this by using incentivized option vaults with flexible settlement at the expiry, basically pooling NFTs around strikes and expiries. This would get a market going for buyers to speculate and hedge their positions and pay premiums to the option writers. So we simplify option writing by limiting deposits around specific strike prices and expiries, and thereby we pull liquidity around those prices and expiries. And this simplifies the buyer experience as well as making the liquidity available for them to trade. We also implemented a proprietary flexible settlement mechanism. So if the option expires in the money, the writer can cash settle, but they can also forego to that right and physically settle the option. And then the buyer can then decide to physically take ownership of the NFT or liquidate it if they opt for cash settlement. So this flexibility reduces risk for writers, provides maximum benefits for buyers, and also rewards other participants in the event of a liquidation. So this is the time to position ourselves for the explosion in NFTfi, which we believe is happening, and the need for sustainable yield for NFTs. My co-founder Remy and I have been working on this since we won a couple of prizes in ETH Global's hackathon in October last year. And you can test our demo, which I'll share shortly. And we plan to launch our beta with a couple of Polygon collections. And we're just currently waiting on partners to provide us with pricing oracles for those collections. Regarding our business model, we plan to implement fees at the buyer level and earn fees from settlement and liquidations. Sorry for the scrolling, I chose the wrong PDF app. Well, skip over that. So founding team is Remy and I, and Remy's a smart contract engineer experienced in developing trading software for top European banks. And my background is in business development for tech companies. And we both participated in several Ethereum hackathons and excited to launch Strike and grow its user base. So yeah, thank you for listening. I'm just going to share a demo.
GM, and welcome to Strike, a decentralized options protocol for the top NFT collections. Strike makes earning and speculating on your favorite NFTs easy. Let's see how we can use Strike to write, buy, and settle options. Let's start by taking a look at the NFT collection vault page. This is where you can deposit your NFTs to write options, buy options, view and settle your positions. Writing options is as easy as depositing your NFTs to the vault. To follow along with this demo, start by switching your wallet to Mumbai testnet. You can then mint and approve demo WETH and NFTs. To start earning yield, select the period or epoch you want to write your options for. For this demo, our epochs last 20 minutes, but on mainnet, epochs can last a day, a week, or longer. NFTs can be deposited in advance for the following epoch and made available to buyers as soon as that epoch starts. You can then select the strike price, enter comma-separated IDs of the NFTs you want to deposit, and stake. In the Options Written tab, you can view all of the options you have created with their strike prices. We now set a reminder to check in our positions at expiry. To buy options, select the strike and enter the amount you want to buy. Option premiums are computed on-chain using the Black-Scholes model. In the Options Purchase tab, you can view all of the options you have purchased. If they expire in the money, your profit is calculated and you can choose to exercise your option. At expiry, the strike price updates and you can claim your premium and cover your position. If the option seller chooses not to cover their position, the NFT can be bought at strike by the option holder. We will describe the option settlement mechanics in depth in our next video. If the option writer covers their position, the option holder receives their profit in their wallet. If the option writer does not cover their position, the NFT can be bought at strike. Alternatively, the option holder can liquidate the NFT and claim their profit. That's it for our walkthrough of our demo. Strike.
Yeah, thank you for watching.
Thank you, Oshi. So that's the whole presentation, right?
Yeah, that's it. Thanks.
Thank you. Yeah. Oshi was sent to me by Dopex founder. So I'm good friends with Dopex guys. Dopex has been doing quite well in terms of the token side of options. So yeah, Strike is being inspired basically by Dopex, what they're building as well. That's a perks of having good connection with good founders, because they will keep sending you their good friends or early stage founders they know from the early days. That's very cool. Anyone got questions for Strike? Feel free to ask away.
Yeah, I have a quick question. I noticed you mentioned your settlement pricing determination at the end of expiry. First of all, kind of two questions. Are you grouping expiries to all expire at the same time? So to sort of concentrate people's positions? And then what type of settlement method are you using to actually settle those positions, or what's your index pricing based off?
Gotcha. Thanks for the question. So as Belinda mentioned, we are heavily inspired by Dopex's vaults. And the idea is to bootstrap the liquidity around certain, obviously certain collections, but also certain strikes and certain expiries. So that kind of allows groupings around that. And to answer your settlement question, the idea is, so once the option expires, if it expires in the money, then the option writer has the option to settle it in cash. And if they forego that option, then it goes to physical settlement. And then the option holder can also decide to either settle it physically, or they can forego that option. And then the underlying asset would go to through a liquidation process to be able to cover for cash settlement for the option holder. Hopefully that answers your question. If you have any more questions about that, I'm happy to answer them.
For settlement itself, are you looking at floor price of the underlying asset, an average price, sales price, anything like that?
Yeah, so we're working with Chainlink oracles, and we're actually partnering up with MetaQuant, and they're helping us, develop a more robust oracle with swap and just kind of filtering out any spam transactions, any outliers, things like that.
Cool, thanks.
Thank you.
Awesome. Thank you, Oshi, for the answer. And thank you, James, for all the great questions. Awesome. Next, we will have Anna from Nibbl to share with us what they're building there. Anna, feel free to share your screen as well.
Cool. It's visible, right? Screen is visible. Okay.
Is that your screen? Wait.
I think maybe someone needs to stop sharing, the previous speaker.
Oh, right. Oshi.
Yeah.
Awesome. Thanks.
Just 1 second. Yeah, GM guys, by the way. So yeah, this is Arnav from Nibbl. This is our team. About me working in this space since 5 years now. This is the industry I've been working in since college. Used to work at Gnosis before, first employed by Economy and a couple of other companies. And we have a stellar group of other people as well. So what is Nibbl, right? So Nibbl is a primitive for fractionalization and reconstitution of NFTs. Like that's, if you really want to look at the tech side of things, that's sort of how it is. But we just don't see us as a NFT finance play. It is like, NFT finance and community. And the basic idea for Nibbl started like when I became interested in this concept where you have an NFT that is owned by one person. It is designed to be owned by one person, the 721 contract. And then I became interested in the idea where, we have assets in the real world, which are privately owned, then they are, can be traded publicly or getting a lot of people owned, and then they can be made private again as well, right? For example, Twitter was private, then public, then private again. So this, I became really interested in, making this primitive. That, at the tech level, that's how, Nibbl started. And yeah, this is sort of how the system works. We have an NFT, you lock it in a smart contract, then you create ERC1155 or ERC20 fractions, and people can, buy and sell or reward those fractions. And then there's also an interesting mechanism where if someone wants to make the NFT whole again without needing to buy all the fractions, they can do that as well. And that's where we have also innovated on. This has been some of our stats since launch. We, went through like private audit, beta and stuff. And publicly we launched around, start of this year. We have around 7,000 fraction NFT owners. A lot of people changed their PFPs to some of these NFTs as well. And there have been like very big social campaigns as well that we have done with some of our, fraction NFTs. And I'll just come into that as well. So right now, one of our target market is like going after Web3 projects who want to take an NFT and make it part of their brand and reward their community with it. Because, as you would know, going in some discords of some DeFi projects or some DAOs, like it's pretty dead. And the community in some cases, there's not much interesting things to do. And then you see the collections, you see so many people joining NFT collections, talking random stuff, going on spaces, doing interesting things. And we felt like this could be an interesting way for us to, have one use case of fractionalization where projects can take a valuable NFT, like for example, this doodle, and then, make fractions of it, which are like ERC1155 tokens, for example, and distribute it to their community in a way to give some identity of their community online on Twitter, etc. And yeah, like basically doing interesting things around that and getting also some brand recognition of the particular collection onto their own project. So for this, this is we have like worked with a bunch of partners for this already. Gnosis is one which we are going to announce like in a month or so. This is a very big campaign which is going to be around with Gnosis and Moonbird, like official sort of collab, which is going to happen via Nibbl. But our existing partners, and we have had like some projects take a Pudgy, a Moonbird. Now we had a partner take a partner called Polytrade take a Ute. And then on Nibbl, they like what interesting thing projects can do is like they can customize the artwork of the fraction. So and you can create like multiple fractions with different percent ownership of the vault. So like for example, this Polytrade, they if this is like the original Ute, and then they added their company logo and some other branding on the Ute. And similarly, we have worked with like a couple of other projects. Yesterday, I think we announced working with a project called Meta Vault. This tweet like got a lot of engagement, even from like founder of Pudgy and stuff, where so they are like making a Pudgy as part of their brand, rewarding their community with this Pudgy on Nibbl, adding their logo to the fracture and doing interesting things with that. So that is like one direction we are going after. This itself is a pretty big direction. And then projects can do interesting things with it. Like, they can sort of reward it for user acquisition or like just give it to some of their partner communities, ask some of their community members to add this to the PFP. Like we had this one project called Dapless. They took one Emperor and they added the like company logo on the headphone of the Emperor. And because Emperor is CC0 as well, you can do whatever you want. And the fractions, they asked a lot of people to add it to the PFP. This campaign is over. Still, a lot of people on Twitter have it as a PFP, and it was pretty fun. And then we also are working with a lot of collections who have some rare NFT in the treasury, and they want to, make it, get a lot of people to own it. And it's also interesting way for them to sort of get new members in their community without launching a secondary collection. Like they can rare one, fractionalize it, and sell it. Actually, we don't even use the word fractionalized because it is slightly tainted, and use the word editionized because in a way, how we sort of position it is like, this is not, I mean, at least for this version of our product, this is not just a pure financial pay. It's like an edition, a different art piece that you're buying, which has its own consumptive and utility value. And yeah, we have worked with like, some of the biggest collections on Polygon, some on ETH as well. We have actually a drop coming with a very big collection on Polygon where they are taking a Sandeep NFT, which is like the founder Polygon NFT, and fractionizing it, and then sort of like, yeah, selling some fractions and doing interesting things. Anyways, and they have a lot of partners that they have given whitelist to and stuff. And then we have also had like some interesting other projects. So this guy, he's based in the US, he's creating a taco product. And in that product, he is like taking a Sappy seal and he's like customizing. So the original Sappy looked like this, he customized the fraction. And people who are going to buy the taco product, they'll get a scan, they'll scan a QR code and be able to claim one fraction. So that this is also just about to go live soon, like this project collab. He's just finishing some like logistic issues. Anyways, I can't find the Twitter, but yeah, and we have similarly worked with some artists as well for this, and this is like some, yeah, just some Twitter stuff. So what makes Nibbl unique? At the tech level, like we identified two main problems. One was how these additions or fractions were getting traded. And we like created our own sort of bonding curve based system where people can directly buy and sell these additions. They don't need to wait for someone to list them. So you just come on Nibbl, put in money, and you can directly buy and sell. And this is done because we also enforce the person who is making these additions to add some percentage of liquidity that is logged in the protocol, and then people can directly buy and sell. And then we also created a very interesting buyout mechanism, because a lot of times the problem with this type of editionization was that NFT would get logged in the contract, and then people were wary of actually, making these additions or fractions. So we created an efficient buyout mechanism where someone can just come in and trigger a buyout, and the community can reject the buyout using a simple process. And the person who is like, making the additions, like he can also set a timer till which he doesn't want a buyout to happen. So like not allow anyone to trigger a buyout. So if he wants to, for example, build a community out for 3 months, 6 months, 1 year, he can set a timer so that, no one can actually take that power from him. Like he still has the main IP and he's trying to build the community. Like for example, this one, no one can trigger a buyout for like 1st August. But for some, you can go and trigger a buyout, like, maybe if there is a duel on a platform that is like, this one was a successful buyout actually. Yeah, like for this, if you want to trigger a buyout, you can do for around 3.4 ETH right now, which is above floor. So yeah. And then an interesting thing which we also innovated on was that we saw like a lot of people were doing fractionalization on mainnet, and then the problem was like, if you are going to do something on mainnet, at least the reward or investment someone is going to put is like $200, $300, something like that. And in bull markets even more. So what we did is like, we built a system where you can bridge the NFT from ETH to layer 2. We have a layer 0 integration for that. And then we also have for Polygon, the native bridge support. And you can bridge it, and then you can make the additions on layer 2, and the buyout and whatever can happen, and someone can bridge it back as well. So this has also happened on our system where someone bridged it, then people were buying and selling the fractions and stuff like that, and then it got bought out and it got bridged back to layer 1. So that is also, I think, a pretty big game changer, where you can have like, for example, 1 million people own a punk or something like that. I mean, that is technically possible and economically feasible. Maybe not 1 million probably, but even on Matic, I think fees is like 5 cents or 10 cents sometimes. But you can get a lot of people to own it. And then, as I was mentioning, people can customize the artwork, etc. So that is also unique to Nibbl. And then we also have interesting social features that people can use. We had built a token-gated PFP chat, where people who only have the PFP and the token, they can chat. Right now, we are just changing kicks to a Discord bot, because on our platform, people would prefer to have it on a Discord bot. So we are just changing it to a bot. And yeah, that's there. And in terms of our competition right now, I mean, there are 2 types of fractionalization. One is like, you take one NFT and you fractionalize and build a community around it. One is you do like a pool based. NFTX is in that direction. I think Insrt is also heading in that direction from what I heard today. But yeah, I mean, we sort of are in a different category. And then, as I mentioned, we have high token liquidity, efficient buyouts, And then it's multi-chain, etc., etc. So I can send this over. Just running short on time. Market opportunity. So we see like, there's like a lot of potential projects. So we have very big projects that we are partnering up with, who want to take an NFT, a valuable NFT, and make it part of the brand. And there's like, this is like just some random numbers we found from CoinMarketCap and stuff. So like Web3 projects itself is a very big market. A lot of VCs have put in money. They have they want to spend it and stuff. And NFT collections also are pretty big. They have rare NFTs in their treasury that they want to fractionalize. So yeah, and we also see potentially some influencers, as the taco guy was doing, using their NFT, which is on the PFP, and making it part of their brand, getting the community to own that. That is also an interesting market, which we just started exploring with that guy, but we are talking with some other people as well. And this is like, just some number, like this is how we see by 2025, what could happen. For our next round, we are working on a V2, and we are working on Gangbit, which is like a party bid like product where people can pull in money and buy the NFTs. And then we are also going to launch, some of our own curated NFTs, like basically buying some NFTs and selling them at a premium, like 5% or something like that, sort of what Insrt is doing right now. And yeah, like a couple of other things, we also see in future, as regulations improve, going into RWA and like onboarding larger brands. And we also actually are talking with some brands who like want to come into Web3 and, want to do interesting things. So like for example, Starbucks can take a pudgy and, make it part of the brand, get people who are using Starbucks app to even claim some of the Starbucks themed pudgy. These were our pre-seed round investors. You can find about them, pretty good names, I think, in the industry. And yeah, if you are interested, we will start raising soon. So you can reach out. I can send some more info if you want. Not everything is in the deck because we are short on time. But yeah, just feel free to reach out on Telegram. I'm pretty degen, always active on Telegram or Twitter or email, whatever. So yeah.
Thank you, Arnav. Thank you for the great presentation. Actually, Arnav, the team applied for the demo day online, and then later on when I met up with Annika, because we're all based in Dubai, I'm personally also an angel investor in Bioconomy. So Annika also told me he wrote an angel check into Nibbl. Quite interesting. And I think after probably everyone has heard so many NFTfi project, it kind of remind me of DeFi Summer. Like there's a lot of say DEX everywhere. So I think the key also is to see how to get users, because no matter how much you build, it's probably only marginal, or incremental, optimization on top of what's already out there. So I like the WAGMI vibe, the very NFT creative vibe Nibbl has come across. Cool. Anyone got questions for Nibbl team? Feel free to ask away. Awesome. If we don't have any, thank you so much, Anna, for the presentation. And next we'll have Joseph from Kairos. This is the last project for the demo day. It's nice. We only got 7 projects this time. So I'm like, less, be a mean person. So I can allow everyone to finish up. Great. Joseph, feel free to start.
Hey, thanks for having me here today. I'll share my screen. So yeah, you should be able to see it right now. So yeah, I'm going to present Kairos. Basically, we're doing financial tools for NFTs. The first one is the lending protocol. It comes from the experience of my co-founder. It was one of the first employee at Morpho Labs, which is also a lending protocol. And basically, we believe that a lot of things will come from being able to borrow against your NFT, whether it's like to leverage, etc. It's a market that is not new, already $1 billion of volume. Especially since Blend arrived in the market recently. There is still a lot of friction that are the results of the nature of NFT themselves. And that's what we try to challenge. So yeah, it's a market that has 10x in 10 months, especially the last couple of months. I think is the natural next step of financialization, when it comes to NFTs, to be able to enable a lot of other use case. And what we aim to do is to do it first with PFP because that's where the demand is, and then we do a couple of iteration. We build other product on top of Kairos as a base layer, and then we try to catch other market game waves, such as like the gaming waves, real world asset, etc. So I will show directly the product itself, but to make it simple, the approach that we have, we try to be as capital efficient as possible. So the solution that we have built for the first version is basically a mix between like an order book, a matching engine, and integration with other DeFi protocol. For example, like Aave, we receive the support of Aave to do so. But the general idea here is to shift the user experience to the borrowing sides, and even if we have to increase a little bit the risk at first to the lending side. But how does it work basically is that I won't go too much in details, but LPs, they will compete with each other in advance to provide like the best loan to value on the duration in a very capital efficient way. Like the money can be elsewhere while it's used in offers. And so they compete, and when the borrower comes, so the liquidity is already there with the highest LTV as possible, and we don't use like Oracle floor price or something like that. So the offer is only based on the market situation and risk appetites, and all of this is to have like instant loan is the cornerstone of so many other use case. We see that borrowers tend to look for the highest LTV possible. Fixed terms, that's something that we have choose from the beginning, like no liquidation. Doesn't mean that LPs can't quit the position before the end of the loan, but borrowers that's safe during the loan period and that's particularly important for like gaming asset, for example, and the markets we believe not liquid enough to enable like liquidation during the time frame, especially for smaller collection. And also something that we are building right now is to maintain utility. It's something that we have presented during East New York last year. We won East New York with the things, but yeah, basically to recap, we want to have the liquidity as capital efficient, the best user experience for borrowers. I will show quickly how does it work. So yeah, so this is, we have a UI at first for the borrowing side, basically because like LPs we already are working with the largest and they use only the SDK, but you'll simply start. So by selecting the duration of the loan, you will the matching engine will show you like what's the maximum amount you can borrow for, and you have an abstraction of the order book here. Then simple click, you have the build deal available. This is live on mainnet, by the way. We haven't answered it yet, but we've been live for like 2 days. And yeah, if you decide to not borrow the maximum amount, for example in this case, and you want to manage the risk on this particular NFT, then in case of liquidation you will receive part of the proceeds. Liquidation happen only at the end of the loan itself, Dutch auction, integration with Blur, arbitrage bot, etc. And yeah, just to summarize that, you got the best deal possible available, still peer-to-peer, but feel like a pool, and a couple of clicks. So that's for the first version. The second version should be here within 2 months now. And yeah, very quickly on the business model, pretty standard here. This is the state of the competition, but you already probably know them already. Most of them are like peer-to-peer model, unoptimized, and pool model, which have like a pretty low loan to value and capital inefficiency. Blend arrived. They broke the whole market recently, but very interesting move from them. And yeah, I will not go in detail about the roadmap, but we already have fundraised, and we're not raising fund at the moment. We just launched the mainnet that we're going to announce. We have a liquidity and reward program that will soon follow. We are developing additional tools for like optimizing the stake of ApeCoin, captains, Mimlands, assets, etc. Everything to get more liquidity to protocol itself. We'll deploy on multi-chain, and then you will have Kairos Loan V2, which we're going to be like a way more capital efficient model with a lot of other DeFi integration. When it comes to the team, so like I mentioned, Nicolas was one of the first employee at Morpho Labs. So the contract he has built, secure now, I think like 700 million in terms of TVL. Myself, also a computer science engineer. I was advisor for the French Central Bank on DeFi subject and real world assets. Before that, I work in investment bank, private bank. We are a team with 4 other developers that come from Consensus and other Web3 companies, one community builders. And yeah, we receive grants from Crypto.com, Aave, Polygon Village, from the BP France, which is like a European entity. And yeah, that's basically for the whole project. I would love to answer your question if you have any. We're based in Europe, and we will soon have offices in New York too. So yeah, that's pretty much for Kairos.
Thank you so much, Joseph, for the quick and snap presentation. Joseph was introduced to me through another French founder, is a DeFi protocol founder. So yeah, we got the luck of, you know, being early in a lot of these projects. Yeah, so with what Kairos is building, anyone got any questions? Feel free to ask away. The last project for today, for the NFTfi demo day project, the demo day we're hosting this time. Well, if no one got any questions, I just quickly summarize, like, you know, thank you all of you guys who stay with us for almost like, you know, 1.5 hours. It's really pleasant to hear the pitch from this great founders, you know, cool builders who are building all these primitives to help NFT. We are quite bullish in NFT because we believe NFT as a core asset can easily take off, because it doesn't have original thing, you know, like as tokens, you have VC back, etc. But for NFT as a core asset, it's easier to take off. And then all the like relevant infrastructure, like supporting infrastructure, NFTfi, lending and borrowing, derivatives, options, etc. We believe will also face a lot of demands. So, you know, with this bear market, it's very exciting to see a lot of cool projects building their product, and then having the hardcore community to test the product, provide feedbacks, and then the team keeps iterating the product to prepare the bull run. You know, and as the price, you know, gets better, like BTC going back to 30-40K range, there will be more interest in NFT for sure, and then NFTfi will also face a lot bigger upside in my opinion. So yeah, like we have been looking at a lot of NFTfi project, and then thank you so much for all the NFTfi project sharing what you have today. And feel free to join our VC audience roundtable. We'll have a group, Telegram group for that. And feel free to ask any questions. Our team, Chan, will share like the deck of all this project presented today, and feel free to ask for intro if you want to get to know any of the project presenting today. Yeah, so let us know if you have any questions. And last of all, we will host the demo days on a regular basis to showcase the quality project during our research. So yeah, feel free to follow Sharding Capital on Twitter, and then feel free to send us the, you know, any decks that you want to share to the Sharding demo day. And we're based in Dubai. We'll look forward if you like, you know, come to Dubai, feel free to drop us a ping, and happy to meet up in person. That's great. All right, thank you so much every day, and I hope you have a great evening, and yeah, and I'll enjoy the rest of your day. Thank you so much. Take care. Bye.